Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's Best Stock Picks. It is Thursday, August 12th, 2021. And today we're going to answer two big questions that we're getting almost every day in our private community. Is number one is the stock market going to crash? And number two is, what do I do about trading the electric vehicle stocks? We're going to do a run through of all the electric vehicle stocks and some of the tertiary stuff that is involved with the electric vehicle stocks, as well as should you be buying those stocks now? And if you should or shouldn't, how do you plan going forward? That's going to be the big thing. And what do you need to see? We're also going to talk about smart money today. That's one of the biggest questions that we get because we mention it a lot. It's something that we're well known for. What is the smart money and how do I piggyback the smart money? That's really the biggest question that we get. So stick around. I'll be back in just 1 second. Okay, so as with everything that we do on these videos, there's videos for educational purposes. It's up to you to make the final decision about what stocks you buy or sell. And when you do it, hopefully we can help point you in a direction where you're making a good informed decision for yourself. So about the stock market, we had a really good question yesterday by Ellen about confidence and conviction in the current stock market and whether or not my conviction level is high or low and how that affects my trading right now. Well, we need to put things in perspective. And first, we're going to just take a very quick look at the market. And essentially what we're looking at here, and let's actually go out to the weekly chart. I'm not sure how you could look at anything other than saying I'm going to be a buyer right now. Now, whether or not you're buying aggressively or whether or not you are adding to different positions is a different conversation than do you think the market is going to crash? Does the smart reading all the headlines about the stock market right now and is the stock market going to crash is creating fear, okay? But here's the thing. The big blue line, the big blue line is still pointing higher. If you it's interesting. I have this on my desk every day. I read IBD on the weekends. Something that William O'Neill is very well known for is accumulation and distribution type reversals, where over a period of 20 to 30 trading days, you start to see heavier volume on the downside, even if the market is still kind of going up. And what essentially that is implying is that smart money is selling on the way up. They're distributing the shares. They're dumping shares on the way up on, let's just say, 1 day. And then 5 days later, as we're going higher, volume increases and to the downside. But then maybe the next couple of days, we kind of melt to the upside. And cumulatively, over a period of a month or so, that's usually where eventually that cracks and we start to head to the downside and we see let's just say a move in the other direction. We shift from bullish order flow to bearish order flow. We're not seeing that right now. Matter of fact, we're seeing some pretty clear sector rotation where we basically this week moved out of technology stocks and we started to move into financial stocks, basic materials, like I'm dancing, basic material stocks and industrial stocks. So the point that I want to make here is very simple. Technology stocks are very sexy. They're the stocks that everybody knows, everybody uses, all that kind of stuff. And one of our members of our community, probably about a month or two ago, Chris Furris, actually said that it's going to be very hard for the market to have a screaming move to the upside without tech stocks being part of that, without tech stocks being obvious. And he was right. The market was carried to the upside by tech stocks for the better part of 2 months, but now we're shifting. So does that mean the stock market's going to crash because tech stocks are not? I'm going to actually show Apple in a second. Does that mean that tech stocks are not carrying the market anymore? No, it just means that order flow, the smart money, the deep pockets, people with deep research and deep resources have shifted where they think the market and the economy is going to be going forward. So don't forget, the stock market is what's known as a discounting mechanism. It's pricing into the future. It's telling us where we think we're going, not where we've been, which is very important to understand. When you buy a stock, you're buying their future earnings. You're not buying what they did. What they did is awesome, and that could potentially tell you what's going to happen next, but you're buying the guidance going forward. So take, for example, if we take a look at Facebook, which is kind of interesting, Facebook reported great numbers, but those numbers were against a year over year. So you can see that the stock as of right now has not recovered since the earnings, which happened over here. So what does that mean? That means that order flow, again, is the deep pockets that moves the market. It's the reason stocks go up and down, because they have that deep money, deep resources, and deep research to put predictions, for lack of a better way of putting it, to put projections based on raw data that they do and build those positions over time. So the same way that smart money builds positions over time, and I'm actually going to show you an interesting one-day interesting price action to give you a clue or to give you something to watch prior to the move happening. And it was actually called out by a member of our community, John Lynch, the other day in a energy stock that's still going down, but something different happened. These are the little clues. So remember, we just talked about happens over 20 days, 30 days, and then eventually moves in the other direction because you're seeing accumulation or you're seeing distribution. I'm actually going to show you that chart right now. So John called out this stock right here. And when we have our game plan meetings in the morning, you would look at the stock, you'd be like, oh, what the heck? The stock's going down. There's nothing to do here, right? Nothing exciting. But John's not lazy. John's a hard worker, and so are you. And he dug a little deeper. And this is what we teach. What we talk about is price action plus volume. Again, this is getting back to, is the stock market going to crash? As of right now, we are seeing rotation, but we're not seeing distribution. That's a big difference. So if we take a little bit of a deeper look here and you go into the volume, this is what John noticed. So not only did we stop in this stock at the level where it has stopped once, twice, now 3 times, volume exploded. And actually, you can probably see it a little bit more dramatically here. Look at that. Look at the volume after the significant move to the downside. So does that mean that the stock now is just going to start launching up in the other direction? No, keep in mind it happens over time, which is why you need to do, and I'll show you this really quickly, which is why you need to do this every day, which is why you need to be a part of our community every day and pay attention to the rotation. So you can see technology and healthcare, which was dominating this list, has started to work its way lower. And money is now shifting into other areas, specifically financial, which we're going to go over a bunch of financial stocks. So when you think and you have somebody scaring you into the market is going to crash, when is it going to crash? You need to put the pieces together. You need to build that argument for taking risk or build the argument for not taking risk, because the reward potential might not make sense. So that's another thing too, is we've had some of these stocks that have exploded after earnings, really big moves, but the risk that you need to take on the trade doesn't match what you could potentially make on the next idea. So all of these things combined are what make you a trader. This is the difference between just running a scan and saying, oh, I want to buy that stock because it was up yesterday, versus putting the clues together so you have absolute unshakable confidence that you're making the right decision. And that's really what my goal is, my hope for you. My hope for you is that you believe in yourself so strongly that you built a great argument for putting your money in harm's way. And then it's just a question of the deep pockets and follow through after you put that trade on. So always remember that trading is about paying attention to the price action and the volume and how those two things combine at certain areas on the chart. Is the volume going up as it's going up, or are we seeing spikes in volume after a significant move to the upside, which implies a potential reversal, which implies money changing hands from deep pockets to maybe uninformed traders who aren't paying attention. So I just wanted to point that out. We're not seeing it yet, but I'm giving you the clues that we can discuss on these videos to pay attention. If I could just ask you one favor, if you find these videos helpful, click down and subscribe. That would mean the world to me. It would also let me know that these are the kind of videos that you like, and I'm actually helping you put the clues together for taking risks. Don't forget to hit the alert button, smash the like button. That would mean a lot to me. And definitely click down and leave a comment. We talk about a lot of stuff here. You might be watching once or twice, pause it, and ask a question about something that we review, because I want you to learn. I want you to be in there with absolute, unshakable conviction that you know what you're looking for. And it's a really big spot to get to in your trading, when it's not a question of what happens. It's a question of you know what you're looking for, and you'll only accept risk if you see it. One of my first mentors used to say, if it's hard to find, it's not there. And he was 100% right. And that kind of takes you away from fear of missing out, because if it's not there, you're not putting money in harm's way. So I'm going to just shift over quickly. We talked about the market a little bit, and we've been talking about financial stocks. But I want to, before we get into financial stocks, we're getting a ton of questions about electric vehicle stocks. So we're actually going to start out with Tesla, and I'm going to do a rundown amongst them. There's been a lot of bad news about specifically Chinese electric vehicle stocks, but we want to take a look at the price action, and specifically XPEV. XPEV was on fire. It was one of the strongest stocks by a mile. Then they came out with news about an offering, and we kind of mentioned that this smells a lot like sell the news. And since then, the stock has pretty much been sideways and not able to break out of this area. You can see a significant level, found support here, broke down here, got up here once, twice, couldn't quite get up there. So above this $46 level is where we're looking to initiate a new, bigger position. But the point that I want to make here is this, and if we break this out on the weekly chart, which is where it becomes a lot more obvious, you can see here, if you remember yesterday, we discussed melted candles and reading candlestick charts and keeping them as simple as possible. We talked about a melted candle being indecision. So if a stock opens here and trades all the way up here, it comes all the way down here, and ends up very close to where it opened, that's indecision because a lot of price action happened and it almost opened and closed in the same spot. You could see that with a smaller bodied candlestick, but a big range from high to low. So if we look at the electric vehicle stocks, and we're going to use XPEV as an example here. You can see now for 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks in a row of melted candles. So right now, we don't need to guess. There is no fear of missing out. As of right now, there's indecision in XPEV. So if the smart money and the deep pockets don't have an opinion on that stock right now for over 9 weeks, why would we have a longer term opinion when people with a lot more money than us, those deep pockets, the smart money, who have a lot of research, haven't made a commitment yet? We're not seeing heavier volume. We're not seeing one day of big green buying and then a pause. Right now, those stocks are more active day trading stocks because they have everyday liquidity and they have good intraday volatility. There's opportunity on a very short-term basis. The bigger picture would need to open up where we would start to see this, where we would start to see from 1 week, remember this is a weekly chart, 1 week to the next, smart money, the deep pockets are paying higher prices. They're supporting higher lows from one day to the next, from 1 week to the next. And as of right now, there's no decision on that. Now, NIO actually came out with earnings, and you can see, hopefully very quickly now, you'll be able to spot in a heartbeat that we have melted candle, melted candle, melted candle, 3 weeks of melted candles, 3 weeks of indecision. Now, NIO just came out with earnings, and the stock did not sell off, even though all of this other stuff is going on. That's actually a positive. Does it mean that we just hop on board right away? No, what we want to see is a day, maybe even more than 1 day, of what we call energy candlesticks. So we want to see a day like this where we have a large green candlestick, which shows buying, right? Remember, the open down here, closed all the way up here on this kind of day. So we have earnings that came out. So what we're looking for now is energy. We're looking for energy. We're looking for attention. If that happens, then we start to put the clues together to decide that we want to get involved. But right now, not much going on. Let the market tip its hand. When the money's sitting in the corner, just go pick it up, as Jim Rogers said. As of right now, we're looking for the first clue. Not selling off on earnings could be that first clue, but we're going to pay attention to that today and see how this stocks unfold. So I'm going to go through the list of them. Tesla, we said we're watching. We wanted, when it was down here, we said we need to see it get above 700, stay above 700. That's also maintaining that level. And again, smart money, right? One level, supporting higher lows, supporting higher lows, supporting higher lows, supporting higher lows. So any selling that's being done is being matched by buying, and they're also paying higher prices. And this is impressive. Now, remember what we said before about if they start to roll over, you start to see prior to that happening, while it's higher, you start to see a heavier volume day and going down that day. Maybe a few days go by where not much happens. Then you see a heavier volume day to the downside. That's distribution. That's smart money making a different decision. We're not seeing that in Tesla. As a matter of fact, Tesla pushed above 700, has now paused for the better part of 2 weeks, and volume has decreased, which implies follow through to the upside, implies the big thing there. As of right now, the same thing with the bigger picture of the market. We are not seeing distribution. We're not seeing selling activity. Is it boring right now, the fact that we're not seeing massive readable volatility? Yes and no. It's yes and no if you're only relying on the indices. Right now, remember, if you remember the stock market power, the stock market power pyramid, we have the market on the bottom. That's the basic foundation, the NASDAQ, the S&P 500, and the Dow. Above that are the larger sectors. Above that are the industry groups. And above that are the stocks. So if we look into the sector rotation right now, and we'll take a quick look at that, even though the market itself is not screamingly green right now on the daily charts, there's plenty of opportunity. Financial stocks specifically have been breaking out. Now, the little bit of a challenge that we have in some of the financial stocks is they're a little bit overbought, for lack of a better way to put it. And I kind of hate to say that language, but there is a certain amount that stocks move. And we've been trading the stock pretty much every day for the last 5 days. We're making it easy, following the smart money. Still looks good. Volume is increasing. You see volume here, pausing, going lower during the pause, increase on the move to the upside. That's exactly what you'd want to see. So we're following the smart money. We're piggybacking the smart money. There's no reason to be guessing which stocks we should be trading because they're obvious. They're screaming at us right now, and we're just hopping on board. The other sector that we keep mentioning right now is basic materials, and they've been bouncing. So what does that mean? What does that have to do with you right now, right? This, the whole point of watching these videos, if you're actually here at this point with me right now, 16 minutes into the video, is you have a hunger to put your money in the right place, whether it's a day trade, a swing trade, a position trade over from one earnings report to the next, or as an investment. I want to tell you to keep it simple. I want to tell you to keep coming back to these videos every day. Make sure you hit subscribe because we're walking through the difference between somebody who is just reading charts for patterns versus reading charts for money. That's the big difference in what we do. It's not just a question of that stock's going up today and I can't wait to be a buyer. It's that stock's going up today and how much potential is left if I choose to take risk. Is it worth it? And that's kind of what we're talking about now with the financial stocks. The money rotated into financial stocks over the last 10 days, still very strong. We're going to be looking to buy those as day trades right now, specifically the ones that we just mentioned, but we need to see them cool off a little bit and then look for another swing trade. So when you buy those stocks, once you recognize the smart money, that makes all the difference in the world because that last piece of timing into those trades will ultimately be what makes you profitable because you're getting good entries. So it kind of takes us to the other side of the equation now. We do have some trades that rolled over the last few days, and I want to talk about one in particular, maybe two. I'll give you two that have been really, really strong and now pulled back for a couple of days. And we're actually looking to be a buyer of those stocks on weakness, but it's short-term weakness. The longer-term picture has been very bullish, and specifically the last few months. Now those stocks have paused, and the odds of the smart money stepping back in to buy those stocks are pretty good right now. So we're looking for them to open a little bit lower, find support, and then rally again. So I'm just going to show you two of those stocks that meet that criteria today. So probably the bigger one is Moderna, mRNA. So you can see the order flow in the stock for the last several months and now has pulled back a little bit. You can see it's actually up $7 already at this point. And the other one I want to point out is Net. Net actually had earnings. Earnings were good, pulling back a little bit after earnings, seats opening lower. So I'm actually looking for Net to trade lower and find some buyers. So what's kind of cool about the way we do things is we don't do any predicting. We're simply paying attention to the price action and the volume, where that happens, and then we set up trade scenarios from those ideas. This is really kind of fun because we're never overwhelmed. We're never confused. It's just a question of if there's price action, how do we read it? If there's no price action, there's no trade because then at that point you're guessing and you never want to guess when you're putting your money in harm's way. So a lot to discuss right now. Again, we talked about the electric vehicle stocks. We're not seeing them sell off anymore with a lot of the bad news. So now we're looking for clues. Financial stocks have been on fire. They're a little bit extended. So we're going to day trade them, but wait for a pullback to initiate new swing trades. And the two stocks that I just mentioned have had nice pullbacks. And now we're looking for new spots to initiate those trades back in the direction of the bullish order flow. So remember, if we end this video with one thought, if it's hard to find, it's not there. And number two, the smart money has a lot of resources. It's our job to just find what they're doing. As long as they're doing that, we just hop on board until we start to see heavier selling and then heavier selling and heavier selling. We're just going to continue to follow them until we see a reason to believe that it's changed. If you have any questions, leave a comment below. I'd really love to hear from you. Have an awesome day, everybody.